Real estate investor goes to buy a property, gets ready to close, finds out that it's in a flood zone that's going to require flood insurance. No big deal, right? He starts to get some quotes. $12,000 for less than a $500,000 property in Birmingham, Alabama. What the heck's going on? Well, I'm gonna show you exactly what's going on, and if you're a real estate investor, how you can solve this same problem. So, this particular property had 3 losses within a 10-year period. That made it part of the severe repetitive loss list with the federal government. This meant that private flood insurance was not available. This even meant that write your own companies like Right Flood, Assurant, all these other companies that go through the federal government third party couldn't do anything through there. You could only go NFIP direct. The premium was $12,000. But why was that? What could this potential owner do? Well, that's when we started diving into the mitigation. All right. What was the issue here? Well, when diving into mitigation efforts have been done, like holes in the foundation had been filled where water could not enter in there. There had been other things that had been mitigated, like the property being elevated. There was an elevation certificate out there where all this was documented, but it wasn't being used for the flood insurance. So we started diving into the flood insurance after having a conversation with the previous homeowner, the potential homeowner, the floodplain manager, and we started analyzing it with FEMA. And what we also discovered was this. They were being quoted the standard amount for contents coverage, $100,000. This is a real estate investor. There's probably gonna have a minimum amount of contents coverage in the property. So we start talking with the potential buyer. All right, what kind of things are you gonna have in here? Are these really gonna be building coverage, or are they gonna be contents coverage? So we were able to break it down to really where contents coverage needed to be, 25,000, not 100,000. This helped with the rate. Then we looked at replacement costs, and we discovered that replacement costs was about 750,000, when it really should have been closer to 500,000, using an appraisal to prove our point here. These 2 factors alone helped drop this rate from $12,000 a year to $5,500 a year, where this real estate investor could get closed on this property at a reasonable amount they felt comfortable with. Now here's the next part of the story. The previous homeowner actually had a policy through a private company, but the insurance agent did not disclose the claims. That policy was $7,500, but here's the catch. Had a claim happened, that policy would have been denied because that carrier does not insure properties that have had more than one claim or more than a $35,000 claim. So as a real estate investor, you want to be careful with these things. The worst thing you want to happen, first of all, is to buy a property, flood insurance not be reasonable, you find out you can't flip it, or you have a claim and it's not covered. And that's exactly why we're here to help you. This is exactly what we do every day at the Flood Insurance Bureau.